Hello guys, welcome to your first day learning with ForexKits Academy. Our lesson today is on Forex orders. Okay, so Forex orders. So you understand, that you take buy and sell trades in foreign exchange. But when do you take these orders? What kinds of orders are available to you as a trader? Okay, so we are going to start with the most used type of order, which is the market execution. Okay, so market execution or instant execution, as some people will call it. Okay, this is when you get into a trade, at the exact market price. Okay, so instant, just like the name says, you get into a trade by yourself. So you go on your trading platform, just like you're seeing on the screen right now. Okay, you go on your trading platform, select the lot size that you want to use, select the instrument or currency pair that you want to trade, and then click what, a buy, or you click a sell trade. Okay, and that is you executing at the current market price instantly with your own hands. Okay, and then this is the major type of order, because this is what a lot of people are used to. A lot of traders are used to sitting in front of their PCs, and right in front of their devices, to get into trades, and then they'd have to wait to see the confirmations, what price is doing at their point of interest. Okay, and then once we leave that, we have pending orders. Okay, pending orders, and under pending orders we have limit orders. Okay, so limits, and then we have stop orders. Okay, so this is what we are going to consider deeply for this lesson. Perfect. So for limit orders, let's go straight into it. Okay, so limit orders are orders that you set, when price, you have a certain level that you're interested in, and then price has gone past that level, and then you're waiting for price to come back to your level of interest before you get into that trade. Okay, so under limit orders, we have buy limit. Okay, buy limit, and then we have what, sell limit. Okay, so yeah, I'll explain both of them now shortly. Okay, so yeah, let's go into buy limits. Okay, so you're willing to get into a buy trade, and then remember, for a buy trade you expect price to go up, right? Okay, and then let's say the level you're interested in, let's take an example. Okay, let's say that you are trading what, euro JPY. Euro JPY is the instrument you are trading. Okay, and then this is price quoted to you at 95.80. okay, 0.80. Then we have 95.90, and then we have what, 96.00. okay, so price has been making moves higher, right? And then you wanted to get into a trade at 95.80 or 95.80, and then price is currently here at 96.00. okay, and then you cannot take a trade at this level, maybe because of any reason. Maybe you feel that price has gone high for way too much, right? You expect price to come down to a level of interest. The confirmation could be anything. When you get, when you start learning about foreign exchange, you understand demand levels and a whole lot of concepts that might back up the reason why you want to take a trade right here at 95.80, why you do not have to take it here, okay, at this particular point. So at this point, you are waiting for price to come back to your level of interest, okay, before you get into a buy trade. And then instead of getting in here and making maybe a little profit upwards, right, you're waiting for price to come back to this level, so you make all of this in profit. Okay, remember that for limit orders, you're waiting for price that has already passed the level of interest to come back to that level, the level where you are interested in, or the desired price level for you to get into a trade. Okay, so let's go into the next one, sell limit. Okay, move here for sell limits. Okay, so sell limits. Okay, so this is sell limit. So remember that for when you're getting into a sell trade, you expect that price is going down, right? So remember that for limit orders, price has gone past your level of interest, and then for sell, if you're expecting price to go down, that means that for price to go past your level of interest, your level of interest must be higher than where price currently is at. So let's say this is where price is at. Okay, where price is at. Okay, and then this is your level of interest. Okay, so LOI, level of interest. You are waiting for price to come back up to this level. Okay, and it will automatically trigger you into a trade. And then remember that for pending orders, you are not available, to take this trade at that point in time. So you are setting an order on your trading platform, which is Meta. It could be MetaTrader, it could be maybe if you are using a chatting software for practice, it could be TradingView, it could be CTrader, depending on which one you prefer. But then you are telling the market that I do not want to get in where the price currently is at. This is where I'm interested to get into a trade. So as soon as price comes here, trigger me into a trade automatically, right? And then you set your lot size, put the price level, for this particular points that you're interested in. Then as soon as price comes back here, you'll be triggered into a trade. Okay, that is how limit orders work. So all pending orders, whether they are limit orders or stop orders, as soon as price comes to your level of interest, you are going to be triggered into an order automatically, okay, by your broker. Okay, so yeah, let's go into stop orders. Okay, for stop orders, basically you have an area of interest, okay, but it is higher or lower than where price currently is at. So for the buying scenario, because just like limit orders, we have what buy stop order, and then we have sell stop order. Okay, so sell stop. So for the buy stop scenario, this is where price currently is at. Okay, price is here right now. So price, this is your area of interest. Okay, so AOI, area of interest, and this is where you want to get into a trade, maybe for any reason, maybe because you feel that this is a level that a whole lot of investors will be willing to take a trade at. This level clearly tells you that we are breaking into the highs, or whatever confirmation that you have. Okay, you believe that once price reaches this point, it's definitely going to go higher, but you are not certain to take that trade right where the price is currently at. And then it's most times used when you understand that you are not going to be in front of your screen, and then you believe that there's going to be a rapid movement from where price currently is at to your area of interest, and then a continuation upwards, right? So you are telling your trading platform, as soon as you get to this point of interest, as soon as you get to this price level, quoted to your right, it could be 1.0420, you have to copy this number, and put it on your trading platform, telling the market, as soon as you get to this level, please trigger me into a buy trade. And then as soon as price comes to this level, you'll be triggered into a buy trade. Same thing for this sell stop, right? Price is not currently where you are interested in. So once again, for a selling trade, you expect price to go down, right? So price is up here, this is where price is at. Okay, so sell stop, let me write that out here. So this is where price is at, and this is where you intend to get into a trade. So let's say price is where 1.3046, okay, and you want to get in at 1.3044. okay, so it's a 2 pip difference. So it's a 2 pip difference from where price currently is at. So you're telling your trading platform that as soon as it gets to this point, right, trigger me into a trade. I do not want to get in here. Usually it will be higher than 2 pips, maybe 10 pips, maybe 15, maybe 20, maybe 30, maybe 40, depending on your confirmation to get into that trade. But then you're telling your trading platform, once you get here, put me, trigger me into a sell trade, and then your profit target is going to be where, into the lows. It's going to be lower than where you're getting into the trade at. Okay, and then you'd ask yourself, what are the uses of these pending orders? The real importance of pending orders is that they help you, even if you are not sitting in front of your desk, in front of your PC, in front of your phone, because chatting softwares, and MetaTrader for as an example, is available on both mobiles and PC, so you can get into a trade wherever you are in the world. So if you do not have the time to be looking at the market or the chart, and you believe that these points, your area of interest, price is likely going to react a certain way once price goes to that level, maybe you expect that once price comes back to that level, it's going to bounce off higher, then you get into a buy limit trade. Okay, so once price comes there, whether you are on your screen or you're not on your screen, depending on the lot size that you set and everything, your trading platform is going to automatically trigger you into a trade. Okay, or do you believe that price has gone way too low, and then you expect that price is going to come back to a level of interest and then trigger you into a trade? Here, this is where you want to get into a trade. This is your area of interest, right? So as soon as price comes there, you're going to be triggered into a trade. So it will help you, that you do not have to sit in front of your screen all day. Okay, same thing for the buy stop and sell stop orders, right? So let me go to a fresh screen. So would use a real life example. So let's use Naira, okay, for instance. So this is 400, 300, 200, 500, 600. Okay, this is how price is quoted to you. And let's take an example. This is Euro NGN. Okay, this is the chart that you have. You won't see an NGN chart in foreign exchange, because we do not have a stable economy, and we are not properly listed internationally to do transactions on the foreign exchange market. But then this is an example. So let's say price is here at 400. Okay, and you feel that price has gone to 400 and there is no reason that price should go higher than that, right? Or even if it goes higher than that, you are not certain it will continue, right? Maybe to reach 500 or 600. Okay, and then you want to make a whole lot of profit from this trade, and then you have it in mind that the only way you are taking this trade is if price comes back to 300. You understand that if it comes back to 300, at least it's going to bounce off to 400 and then might possibly continue to 500. What you do at this point is what you set a buy limit order. Okay, and as soon as price comes back here, so as soon as 1 euro is now equal to what 300 NGN. So previously, where the time you set this order, 1 euro was worth what 400, and then that's not what you want. That's not where you want to take the trade. You expect price to come back to 300, so you set a buy limit order at 300. Whether you are in front of your PC screen or not, whether it's going to take 3 weeks or 1 month, whether it's going to take 2 days, whether it's going to take 1 hour, as soon as price comes back to 300, you're going to be triggered into a trade. Okay, same thing goes for the sell limit scenario. Okay, so let's consider that right now. So for a sell limit scenario, price currently is at 400, and you do not feel safe getting into this trade at 400. You want price to come to 500. Once price comes to 500, maybe you believe that at this point the central bank and a whole lot of other factors won't allow price go past this point, so it's definitely going back to 400 to stabilize things, and maybe it's going to reach 300 again, and then price is currently at 400. So what you have in mind is that price is going to do what come down to the lows of 300 possibly, but you do not want to get into the trade at this point. You are expecting price to come to 500. At this point, you feel that it's not going to go any higher. There's no way the country, the central bank and a whole lot of the people controlling the policies in the country will let it pass 500, because that would be too bad for the country. So you are saying, as soon as price comes to 500, I'll feel more confident to write this trade down to 400 and to 300, right? Then what you do at this point is get into a sell limit trade. Okay, the buy stop and sell stop is the exact opposite. Okay, the buy stop and sell stop is the exact opposite. So for this particular scenario, you are saying, so we are 300 currently, and then you believe that we are going to reach 400 and possibly 500, but you do not want to get in at 300 because it's not enough confirmation for you. So you look for a better price to get in, which is 350, and this is where you set your buy stop order. Okay, so you are telling price, as soon as you get in here, trigger me into a buy trade. I want to enjoy all of this in profit. Okay, same thing for the sell stop scenario. Is the exact reverse of the buy stop, right? So you are telling the market. So let's take an example here. Price is at 500, and then you expect that price is going to come down to 300. Perfect. So price is currently at this point, and then you don't want to get in there. So let's say you prefer, you'll be more comfortable to get in at 450. So you set a sell stop order at 450. So as soon as price gets into 450, it triggers you into a trade, and then you can enjoy all of this in profit. Okay.